you had placed money into the market when we aired the podcast and you told everyone you need to buy index funds, you need to buy stocks now. I bought some. What happened since then?
So since that day I was here, the market's up 40%. It's down today. Maybe it's 38% now.
40%.
40%.
So if you listen to the podcast and you bought stock, you would be up on average 40%.
Yeah. By the way, when I said that, I came on here boldly standing on my own knowledge.
Yes, and I was a little skeptical.
Expertise, okay? At the same time I'm saying you should be buying stocks, economists were saying there is 100% chance of recession.
Yeah.
Okay?
Yes.
And that's what makes for good prices. People get scared out of it. Another thing we have to understand is time horizon. Different people with different time horizons talking over one another. If the 65-year-old is scared and selling stocks, that doesn't mean the 30-year-old needs to follow suit because he doesn't have time to see the better market. I got 30 years. What am I worried about happening next year?
Well, look, man, you're a bull, and you were like, we're down 20%. Maybe that was an easy call because even if you only did 20%, we'd have been break even. Now we're 40% up. We're at all-time highs or damn near all-time highs. Do you still invest?
Statistics say that the best time to put your money in the market is right now.
That's so hard.
It's not about timing the market, Chaz. It's about time in the market. If you want me to guess how much money you made, I ask you, how long have you been invested and how many trades have you made in that time? If you tell me I've been invested 25 years and I made one trade, and that was when I bought the S&P, I know you're making good money. More money than anybody who probably, unless they got lucky, of course, more money than anybody who tried to do something more complicated. You spent 25 years hanging out, playing golf, spending time with your family. Somebody else is jumping in and out of the market every year and paying advisors and incurring taxes, and they didn't do half as well as you did.
So the more successful people are actually the most passive.
Yeah, I mean, there's a reason why all the Vanguard and BlackRock manage 85% of the world's money, because they charge the least. They're passive. It's all about buying the S&P. BlackRock has SPY, and they also own iShares. Vanguard has VOO, which is the #1 fund. So there may not be a lot of people buying them, but there are a lot of dollars going into them.
If I had $10,000, would you recommend that I buy 10,000 of VOO tomorrow, or would you recommend that I buy 1,000 and then next week 1,000 and then the following week or next month drip it in? Do you have an opinion on that?
So there's tons of studies on it. So I don't. It's not about opinion. It's about just the facts of you can back test this and find which strategy works best. Now, the future is only going to play out one way, and we don't know what that way is. So there's definitely a future where dripping it in was the better idea. But what's more likely is that the market's going to go up over that time. It's always more likely that the market's going to go up.
Depending on the time horizon.
Well, the longer time horizon, if you got 10, 12, 15 years, you got 20 years, it's definitely going to go up. People might think that sounds optimistically naive, but it's based on the fact that humans will keep achieving things. They're not going to stop.
Yeah, and it's something I think Tony Robbins talks about. This is if you miss the handful of days where the market shot up substantially, your average return is substantially lower.
Yeah,
just a handful of days.
Yeah, if you miss the top 5 days of the year, you lose all the returns of the year.
Okay, and give me your 1-minute spiel about why you would recommend that pool of money. We talked about making people money, and the best thing that you've seen in your entire career is ETF funds, specifically some type of S&P. Why is that in a 1 minute better than real estate, crypto, gold, or cash?
Okay. A few different categories of assets there. Some of those that you just said are productive assets. Some are non-productive assets. All of those things have a cost associated with them. When you go to buy real estate, NAR got sued, but still you're paying 5 or 6% to the brokerage. You got to pay a title attorney. You got to pay the tax man. You got to pay the insurance company. Just go down the list. There's so many.
Maintenance.
Tax. Home Depot's getting paid. Everybody's getting, and that's why everyone tells you it's a great idea to buy real estate because of what it can do for them. Imagine that. But there's a lot of costs associated with that. Not that you can't make money. Definitely can make money in real estate.
But it probably there's more costs and it takes time.
And it takes your time. And to me, that's the biggest cost. I don't play around with wasting my time doing things that aren't going to be productive to me while I have 3 kids at home that want to see daddy.
Got it. Gold.
Okay. Gold is a non-productive asset. It doesn't do anything. It has some value, but on the whole, look at it long time. Like, it's hard to say because right now gold's up a bunch. So it seems like gold's a great investment. I should have bought some gold. But zoom out and look at what gold does. Since World War II, gold's gone from, let's say if you put 10 grand in gold, you'd have 400K now. If you put it in the top 500 American corporations, you've got more like $50 million. So no comparison.
And cash. Why don't I just keep it in my bank account? I know it's safe, right?
Yeah, well, it's
access it.
You're not going to be able to buy as much stuff next year as you will with this year with that cash. Right now, especially, if you put cash in the bank 5 years ago, you can only buy about half as much stuff, but you could also put it in a money market and make 5% with no risk and at least keep up with inflation.
I want to tell you thank you because you mentioned to me the VMFXX. Laith, how many times have I told that to clients? I was like, look, I think you need to invest this money, but if you do nothing else, create a Vanguard account and put it all in VMFXX, which is where they actually hold your money. It's not an investment, zero risk, where they hold your money, the settlement, the quote unquote settlement fund, hey, pun intended, is paying 5.29% interest.
Yeah, it varies slightly from month to month because it's all based on what the Federal Reserve says interest rates are. So Federal Reserve right now, interest rates are 5.25% to 5.5%. And that is what banks, Fed member banks have to pay to the Fed to borrow money. So anyone who wants to borrow from the bank's got to make a spread. You got to get a little bit higher than that. But with the money market fund, it's literally like it's an overnight pool of liquidity that people can take from and put back in order to make things fun. You don't want a liquidity crunch, know.
But even if you don't open a Vanguard account, or I think Fidelity has an account too.
Any brokerage account.
Robinhood probably plays the same. You should at least call your bank and have them move the cash into some type of higher interest.
Yeah, some kind of high. Yeah, I mean, even I hate CD. I shouldn't use the word hate. I don't like CDs because you have to lock your money up. And meanwhile, you could buy a money market fund, get the same rate, maybe even a little higher rate, and take it out whenever you want and put as much in whenever you want.
2 days later, that money's in your account.
2 days later, you could pull it out again if you want. CDs lock you in, and you're not getting paid enough for the lack of liquidity.
They're locked up. You can't access them. And there's 12-month, 18-month, 2-year, et cetera.
Yeah.
I've had some clients that have bought CDs. It got the money out of their hands, which you see as a problem.
Correct.
They saw it as security.
Yeah.
Right. They're less likely to spend it, and at least they're getting some type of return from it.
That's true too. And that's why I shouldn't say I hate. There are a couple financial products that I do actually hate. CDs aren't one of them though.
And then what was the cash? Okay, we talked about cash. Mm-hmm. So what's the problem with cash other than your money will be just the inflation? Not only are you not getting any return, but the inflation is actually eating you up.
Yeah, cash really isn't meant to be held onto and hoarded. I mean, let's zoom out and talk about.
You sound like Grant Cardone there for a second.
Cash is trash. I think Ray Dalio's cash is trash. And one thing that Grant Cardone says that's correct is money in your home is dead money. Like people who want to get their mortgage paid off, especially when interest rates are 3%, when you think you're doing this great thing by paying off your mortgage, but you're really just. You could have done anything with that money. You could have invested that money and made 9% and only paid 3% on and got a nice 6% spread. That's what banks do.